good morning, good afternoon, everyone. Thank you for joining us today. I'm going to give a quick intro on myself before I invite our speakers for the day. My name is Mansi Vora. Some of you might already know me. I'm a member of the CFA Boston Society. I also sit on the Education and Advisory Council at the Society. In my day job, currently, I'm working at Skynet Labs, where we are building the decentralized infrastructure for Web3. And I'm also the founder of Women in Blockchain, which is a nonprofit to increase diversity in the crypto space. I recently launched a fund as well to invest in female-founded companies in the crypto space again. So I'm heavily involved, as you can tell, in the space, and I'm excited about today's topic, which is how does institutional adoption look like for this technology that's been now more than 12 years old? And we've seen that institutional adoption grow. And really in the last year or so, we've seen a huge influx of new companies, from banks to fintech organizations kind of show their interest and really think of various ways that they want to be involved in the space. And to talk about that, we have none other than two amazing people from Fidelity, which is definitely a leader, not just in the traditional finance and asset management space, but also in the Bitcoin and crypto space. So very excited to have Christine Sandler and Brian Abley here with us today. Welcome.
Thanks, Mansi. It's great to be here with you. I am not a CFA, so I'm not a member of the CFA Society, but I'm responsible for a sales, marketing, and the research function at Fidelity Digital Assets. I joined the company about 2.5 years ago from a competitor, Coinbase. Prior to that, I spent about 30 years in traditional finance, mostly around the electronification of the equities business. I'll hand it over to Brian.
Thanks, Christine. Hi, everyone. My name is Brian Abley, and I work in business development for Fidelity Digital Funds, which, as we'll discuss during our presentation, is kind of an adjacent business unit to Fidelity Digital Assets, which Christine represents. I've been with Fidelity for 7 years. Prior to working in Fidelity Digital Funds, I worked in Fidelity's consultant relations group. I'm also a CFA charter holder, and I vividly remember, as many people on the call probably did, sitting for level 1 spring of 2016 in the Boston Convention Center. And if you told me at the time that I'd be discussing Bitcoin and cryptocurrency at CFA events 5 years later, I would have called you crazy. So excited for the conversation today, and hope everyone gets a lot out of it.
That's amazing. Before we dive into today's topic, talking about just the background of Fidelity in the crypto space, where they are seeing the digital asset space grow into, and also talking about the institutional investors digital assets study that Fidelity does annually. It's definitely one of the resources that the entire crypto industry looks at. So before we do that, we had a couple poll questions for our audience today. Jamie, do you mind putting them on? We would appreciate your inputs here. I don't know how long these last, but I assume a minute. Oh, we have a 50-50 in terms of how many people own digital assets in this group today. That's amazing. Can we also do the second question? And for people who can't see that, what are your most notable concerns about Bitcoin and digital assets? And the options are regulatory, ESG, volatility, custody, fiduciary concerns. This is definitely an interesting question, and hopefully we can address some of these concerns and challenges in today's discussion. That's not surprising to see regulatory as the biggest concern. That's definitely top of mind for the entire crypto industry at the moment. And then we have one more poll question for the audience today. And that says, my existing or potential future exposure to Bitcoin and digital assets is most likely to be in the form of, and the options are direct exposure, trading of futures, exposure in an ETF or similar product, combination of derivative and direct exposure, or I'm not planning any exposure to digital assets. Interesting to see CFA members being really adept, and 45% wanting direct exposure to the crypto industry. So thank you all for participating in the poll. We will be doing Q&A towards the end. I'll definitely make sure to leave enough time, but feel free to post your comments, your questions throughout the conversation, and keep this an interactive panel today. So just starting with, Christine, I would love to hear from you just the background of Fidelity in the crypto space. Like, how did it start? I know it goes back to 2013, 2014. You've been really one of the early entrants in the space. So I would love to hear the history of Fidelity in the blockchain space.
Sure, I'd be pleased to. And Brian, please chime in if I take unintended liberties. But within Fidelity, we have an organization called Fidelity Center for Applied Technologies. And that's where we study lots of different base level technologies, whether it's AI, virtual reality, or distributed ledger technologies. And we use those technologies and think about what are the practical applications for the benefit of Fidelity, our clients, and even the broader ecosystem. And back in 2013, 2014, we started to look at distributed ledger technologies. And as part of our exploration, we began to actually mine crypto. So we started mining crypto in 2014. Our mining activities continue to this day. As a result of those mining activities, we amassed some crypto, and we looked at the ecosystem in 2014 and said, wow, this is really interesting. There is no one that actually kind of meets an institutional standard. And granted, I mean, back in 2014, things were were quite nascent, but we, in holding those assets as an institution, I think we came to realize that there may be an opportunity for us to think about building a commercial business or being a provider in this space. And that launched us into kind of a greater exploration into the pillars of what would be a substantial business, whether it would be serving retail clients or institutional clients. And then we created Fidelity Digital Assets back in 2018, received our trust charter from the state of New York in 2018. And then, our path was, given the fact that Fidelity has a broad cross-section of clients, both retail and institutional, we kind of looked at the space and said, where could we be most influential? And knowing full well back in 2017, 18, there were some viable retail on-ramps that existed, but there was really no one focusing on the needs of institutions and actually kind of helping to mitigate the frictions that institutions felt in either adopting a digital asset strategy or even kind of wading a toe into the water. And so we chose the institutional path and kind of never looked back. And clearly we were very early. Institutions began to dabble in 2017, 2018, but there was a much more meaningful shift in 2020. We can talk a little bit about that, but that's basically the genesis. And we started with two pillars, custody and execution services. And those platforms are integrated, mitigating some additional frictions for institutions. We can talk a little bit about the functionality there too.
And Christine, before I move to Brian, you've had this interesting shift from, having worked at Coinbase, which is really focused on retail investors, to now at Fidelity. What has been the biggest change or shift in terms of strategy approaching these two sets of investors?
Look, I think that there's a different standard in terms of supporting an institution. So it is not just about kind of the access to the product or the usability of the product, but it's also the framework that surrounds that. And, Fidelity is also, committed to having a fully audited, as regulated as this ecosystem requires. We will be as regulated as it requires. And to the extent that we found that there was a shift where a better regulatory framework was appropriate beyond kind of a trust charter, I think we would seek that. But at the end of the day, I think that it's not just access to the product or access to trading and custody, but it really is the institutional framework that's required. So really the robust control infrastructure that we provide. So it meets an institutional standard, and that is part and parcel of how we roll out product. So we may not have the same type of access as, say, a Coinbase, where Coinbase really custodies and trades a very long tail of assets. We found that our institutional clients were a lot more focused on both Bitcoin and Ethereum, Ethereum very much of late. And so our product offering is definitely a little bit more focused, but within the context of that focus, we're very robust.
And Brian, can you tell us a little bit about the Fidelity Digital Funds division? I believe I understand it's a relatively new division within the Fidelity ecosystem.
Yeah, so what Christine talked about, Fidelity's first commercial foray into the space was custody and trading execution. That's done in our Fidelity Digital Assets business venture. And then from there, some of the feedback we started to hear from the marketplace was they would prefer a fund structure to invest in Bitcoin as opposed to trading a direct custody for a whole swath of different reasons. And again, based on the polling, it doesn't necessarily meet every investor that we're talking to, but due to convenience or a mandate from their committee that they'd have to have a fund structure which supports an NAV, or they just didn't want to deal with trading the asset themselves. Sometimes investing via a fund structure is a more convenient means to access beta to Bitcoin or another digital asset. So think of our team, Fidelity Digital Funds, as kind of like a client of Christine's team, Fidelity Digital Assets. So I'm one of Christine's clients, if you will. You can think about it from that perspective. So what we have in the marketplace is a vertically integrated Bitcoin solution ecosystem, right? So it starts first and foremost with educational resources built on top of the 7+ years of research that we've done under the space. And then also, irregardless of what type of solution a client wants, whether it's a direct custody or trading solution, which Christine Teams offers, or just a fund structure to invest in Bitcoin or other digital assets, which is what my team offers. So right now, what we're focused on is using our scale and distribution to have a non-traditional fund structure, which offers a beta to Bitcoin. We're one of several asset management firms for people, if you don't know, if you follow the news, that have filed S1s for Bitcoin ETPs for an ETF structure, which would invest in Bitcoin. More to come there. And then right now, as a business, we're kind of focused on soliciting feedback from the marketplace, from the institutional community, as well as the retail community, for, as you're thinking about an initial or more deep investment in digital assets through a fund structure, what is it that you want and how do you want it to look? So right now we're kind of in the whiteboarding and research and development space, working with research and development space, working with our wide array of customers to focus on what type of product is going to meet their needs for investing in this asset class in the future.
Yeah, and I definitely want to come back to that discussion around what you're seeing in terms of demand for investors, from investors, and what kind of products you're thinking about internally. But before that, I really want to hear about how Fidelity is thinking about the future of digital assets. Clearly, you are bullish about this industry, and that's why, kind of the team is growing, the offerings is growing, but I think it would really benefit the members to hear what is your outlook for the entire digital asset space, but also Bitcoin in particular.
I'm happy to kind of kick it off, but Brian, I'll hand it over to you as well. So from a digital asset perspective, we see great promise with respect to the overall industry. The transformational effect of the technology and the application of those technologies will not only impact financial services, but also many other industries. And we're starting to see kind of that emerge both in the art world and collectibles. So from a usability perspective, we do see the transformation as applicable across multiple industries. Specific to financial services, we feel very strongly that we'll see the creation of additional asset classes. We will have a greater democratization in terms of holding bespoke or illiquid assets, and we'll start to see kind of greater use cases. And it really obviously is predicated on the use of the technology and the governance and regulatory evolution. But we are really just getting started. When folks ask us kind of, look, if this were a baseball game, kind of what inning are we in? We typically say, we just pulled into the parking lot. I mean, quite frankly, there is so much to build and there's so much potential for not only this technology, but for digital assets in general, and the diversity of digital assets that we are seeing, even though there's several thousand of them. We've just scratched the surface in terms of usability. I mean, clearly DeFi holds tremendous promise for the future of finance in general, and the possibilities are quite broad. So we believe deeply in the future of this technology and also digital assets in general. Handing it over to Brian.
Yeah, so Christine, I use a similar analogy when I speak to clients and prospects, and I almost state, like, there's the analogy like the baseball game in the early innings. I go as far as to say that I think people are still tailgating in the parking lot and haven't yet entered the game at this point. Just because I think if you think about the novel evolution of the internet and becoming more accessible to people, that was the disruption of the distribution of information, right? This is the disruption of distribution of money in a digital manner native to the internet. And I think it's really difficult. Maybe some people are smarter than me and can envision what it looks like in the future. It's really difficult, I think, for our minds to imagine just how radical this disruption and transformation is going to be, right? So think about like the early onsets of the internet in early 90 getting to Instagram, right? So I think the transformation is going to be quite impactful. I think legacy businesses are certainly going to be threatened or potentially disrupted by these transformations. And I think by onus to people, or I think kind of the maybe the first inning starting with like the institutional investor community, which hopefully will happen within the next year, I think is probably formal recognition that this is an asset class that merits consideration and merits inclusion within the context of a diversified portfolio. We're starting to see that, but there's still a certain degree of hesitation about it being like a more formal asset class that they'd want to include within the context of a diversified portfolio.
Yeah, I would agree with you. And Brian, I would also add, we didn't specifically talk about kind of the value prop for Bitcoin, which when you think about the value proposition for Bitcoin from an investor's perspective, that is kind of easily translatable. We do view this as the digital gold. And given that it's, a fixed supply on correlated asset, it has, obviously great value in this market today. And that actually has been kind of the entree vehicle for many to begin to explore digital assets in a much more complete way. And that to us is exciting. So, I do think that we wouldn't be here if we did not have kind of Bitcoin as that kind of standard. And I do think that we're going to see greater use cases around Bitcoin as we start to see layer twos become much more prevalent. And Bitcoin could potentially live out its destiny as a method for global payments as well. So we're really starting to see kind of use cases even around a single currency with Bitcoin as well.
Yeah, I think I 100% agree with both of you. And I think the impact of the crypto space, definitely is largely visible in the financial world, but I think it goes beyond that in terms of there's just this reimagining of how we interact on the internet, how we, with DAOs, it's just about how we can form better organizations that are much more aligned and incentivized. So there's a lot going on in the crypto space, and it's really hard for people who are, even for someone like me who, I'm in the crypto space day in and day out, but it's still hard for me to keep up with everything that's going on. So I can only imagine for someone who, doesn't do this as their full-time job. But, what I appreciate from Fidelity is kind of the content that comes out of it to keep people educated about the space. I personally am biased, but I'm a big fan of all the research work that Fidelity has done, and all of that content is available online. So Christine, I want to jump into the institutional investor survey, but before that, do you want to just quickly tell us about all of the content and the research work that's done at Fidelity?
Yeah, I'm happy to. It's something I'm really proud of, and I think we did get very lucky because we had, we had a very talented individual help us kind of shape that research effort. Ria Victoria has kind of gone on to greener pastures, but the legacy that she put in place is kind of lives on, and really it was about. Look, everything in Bitcoin and crypto is open source. You can absolutely find it, but it really is also about creating that appropriate framework and context for digital asset research. And we found that that crypto native research was not really resonating with our client base. They found it to be, maybe overly rosy, maybe a little difficult to consume. And it really was about creating an institutional standard around, some basic concepts, and really kind of to push the envelope with respect to, some of the critical either concerns, developments, or even the nature of the infrastructure that we have to exist in, like just the concept of custody, and why that's critical and a critical piece of the infrastructure. So we sought to build a research group that focused on the investment case, the digital assets, changes within the ecosystem, and the overall general evolution of digital assets. And with that, for the last 3 years, we've been querying our institutional clients as to their interest in digital assets. And so we've got 3 years of data and a growing database. And I think that that's also been kind of a meaningful touchstone for us to leverage around trends in the industry. So, and our most recent digital asset survey was released. We teased it out in the summer, and then the full survey was released in mid-September. And it's just truly exceptional. What we also saw in this survey was a validation of what we're seeing in the field. So an acceleration of institutional interest, and even going to the survey questions that you asked at the beginning, it was a surprise to see ESG not as much of a concern. I think that I think that there are trends in place where we have now an appropriate mechanism to distribute content that's been consumed by our clients and counterparties, where we can help kind of assuage people's fears with respect to some of the FUD that's around. But regulation also was at the top of the list. So regulation had been at the top of the list for the last 2 years. Over this survey, it was replaced with volatility. So clearly, folks are now involved in the ecosystem and not just on the sidelines, but really thinking about the role of volatility in a specific portfolio. I can pause there, Brian. I'm sure you have plenty to add, but I think one of the other key pieces was the change in terms of the demand profile of our clients as well.
Yeah, and before Brian, you jump in, I just wanted to post the link to the study in the chat. So for anyone interested in diving deeper, we will be talking about it a little bit, but definitely a must read in terms of where the institutional interest is in the space and kind of the trends over the last 3 years. But Brian, yeah, love to hear from you.
Yeah, in terms of the interest from institutional investors, I'd agree with Christine that the survey produced data that confirmed a lot of the realities that we see in the field with the interactions with clients and prospects in the space. And if you think about like, an institutional investor, whether it's like a family office, endowment foundation, hedge fund, corporate balance sheet, defined benefit pension plan, I'm probably leaving out a specific category too. I think across the swath of those types of investors, there's a growing consensus of interest in potential demand. However, in particular, when I think about like a defined benefit pension plan, right? If you're the CIO of a DB pension plan, I mean, there's several articles that have come out recently, one of which detailed, I think, like the 5 largest public DB plans in the United States. They all had, if not their best, one of their best years of performance versus their diversified benchmarks in several years. Funding ratios are at all-time highs. Why are they going to step out on the ledge and think about adding Bitcoin to their DB plan? It presents too much risk. And the other kind of element that we're seeing amongst some of these institutional investors is there's an analyst who's in their 20s or my age in their early 30s who's done the work as an individual to understand it and fully maybe embraces with Bitcoin specifically, like the digital gold or Bitcoin network effect aspect of adding it to a DB plan. However, between them and the CIO, there's a bit of like a generational or like an age gap. And the CIO still views it as like a kind of a landmine on the future like path for career risk for potential adoption. So I bet if you've got a group of CIOs of those types of pools of capital I just described earlier, maybe like 100 of them in a room, 50+% of them, I think, would all agree that there's interest in potentially adding it, but I think they'd all point at each other and go, you first, right? So I think that's kind of where we are today. We're kind of fighting the battle, Christine and myself, on a daily basis with clients and prospects to educate them and hopefully de-risk the asset class in their minds from an investing standpoint.
Yeah, Brian, that was really well put. I also would say that there are some DB and pension plans that have exposure to digital assets through venture investments. And so they do kind of, there's definitely that exposure, but it may not be in the form of actually holding cryptocurrency or having a strategy around digital assets specifically. But what we really have seen is really significant traction in the family office space and the advisor space. So we're seeing wealthy individuals, whether they're tied to an advisory firm or they have their own family office, and family office is obviously a broad term, we're seeing some pretty significant momentum there. And that momentum has manifested itself in exposure, product exposure, demand for product, as well as demand for physical Bitcoin and other cryptocurrencies. Many family offices that were early adopters are now moving into kind of more sophisticated products and asking for recommendations around managers that have been very successful in the space. So we really are seeing kind of a broader evolution in terms of their appetite. And clearly, hedge funds from a risk perspective have been really leading efforts as well. So we are, and it's not just limited to kind of that global macro footprint. It is a pretty broad base in terms of hedge fund adoption. So you're really starting to see them implement some of the strategies that they have in traditional asset classes as our derivative markets begin to improve and become more robust as well.
So what I'm understanding is there's a group of institutional investors that have been the early adopters. Now they're moving on to advanced products and asking you kind of give them exposure to additional cryptocurrencies. And then there is this kind of secondary group of institutional investors that are now just starting to think about the space, it as an alternative investment asset. Am I summarizing that correctly?
Yeah, no, I think that's accurate. And I think one of the most amazing statistics out of the survey was that by 2026, 90% of survey respondents expected to have an allocation in digital assets. That's mainstream. And so when we think about the level, the type of potential for this asset class, we are really just pulling into the parking lot. So.
Yeah, I think to piggyback on that, like I'll just focus on it again, because I think this is what I think of like as a classic institutional investor, like a defined benefit pension plan. So as Christine mentioned, one of the narratives that our clients have drawn upon is Bitcoin as like a digital gold, if you will, and whether it's like a family office, an endowment foundation, an institutional investor of that ilk, they likely are already decreasing their allocations to traditional fixed income. And they'd have a preference for potentially taking a position in Bitcoin because they feel like it's mispriced versus gold as portfolio insurance for inflation risks which are coming in the future. With the DB pension plan, they can't justify not owning a certain degree of high quality investment grade fixed income because they have to hedge the liability risk which they face, right? So I think the approach we've seen them largely take is that Bitcoin would fall in like the venture capital kind of bucket. And as opposed to buying tokens directly, they feel more comfortable buying like a venture capital fund that maybe they have experience with through another format, and then buying like their VC blockchain fund, if you will. However, when this came out in the news 2 weeks ago, and I thought it was really, really interesting, the Fairfax County firefighters and police officer pension plan, I might be mispronouncing the exact verbiage of it. Last year, they had bought a crypto VC fund, which invested in companies engaged in blockchain. But then this year, they took it a step further and actually bought an actively managed fund, which invests in tokens directly as opposed to companies which are engaged in the space. So I think part of the challenges that they're also experiencing as we hit on this call, there's a lot going on in this space. I find it really difficult to keep up with on a day-to-day basis. And if you're a pension plan and you have 12 analysts, it almost is a full-time job to dedicate an analyst to spend time on the space. And then the consultants that they use or hire don't have full-time analyst coverage of this asset class either, right? So I think they're not necessarily sticking their neck out, but really have to have a lot of deep-held personal conviction to kind of sell it to their investment committee and their boards before taking a position in this kind of an asset class.
And is there trend in terms of geographies? Curious to hear if the US is kind of lagging in terms of adoption compared to a couple other countries, or it's leading.
I think you know the answer to the question because you've read our survey. I would say the numbers from Asia are stronger than the US, and Europe is a little stronger in terms of its adoption, and appetite for digital assets as well. So I would say we are lagging slightly in the US, but with a caveat, the demand for investable product out of the US is much more significant. I'll turn it over to Brian to talk a little bit about kind of that strategic.
Yeah, so we're certainly starting to see greater demand for investable product in the United States. And I think what Christine hit on earlier, it's kind of like the double-sided coin, quote unquote, if you will, with Bitcoin. There's Bitcoin the asset, and then there's Bitcoin the network, right? So Bitcoin the asset is kind of like this digital gold narrative that we've been describing, and investors are slowly starting to accept it as a more formal asset class and demanding either direct custody through what Christine's team provide, or some sort of a fund structure to invest in Bitcoin or a whole host of these different tokens or cryptocurrencies. Bitcoin, the network, is, if you think about other parts of the world where people don't have access to traditional banking or financial services, capital markets aren't well formulated, property rights are poorly enforced, people have experienced multiple double-digit inflations in their lifetime, Bitcoin has a higher degree of utility, or utility separate and distinct from price appreciation, right? So that's where we're maybe starting to see greater adoption, but people starting to use it via second layer solutions built on top of Bitcoin, such as the Lightning Network, as a day-to-day unit of account or a means of transaction. So I think the adoption here is, to Christine's point from our surveys, perhaps a bit behind, but people are adopting it for very different use cases and reasons, which I think makes it very interesting.
Yeah, I think that's a valid point. What, according to you both, investors are looking for when evaluating a fund manager? What are kind of, we briefly spoke about some of the challenges and concerns, but what are their needs and what are their asks when you speak to them?
Yeah, so I guess on a fund manager, it depends on the type of investor we're speaking with. For an RIA, it's all about ease of reporting and ease of accessibility, or that's the first and foremost factor they think about. Then they go to pricing, and then they go to custody. I think part of the reason why the due diligence process on fund structures for this asset class is in its infancy is right now the most widely used fund structure is grayscale, which is beta to Bitcoin, if you will, although it has like a little bit of a nuanced structure in that it can trade at a premium or discount relative to the price of Bitcoin. I think as the space evolves into maybe like actively managed multi-token funds, you'll see the due diligence process follow like a very similar path to what multi-asset class due diligence process might look like from a consultant and an institutional investor, with the additional caveat being with digital assets, more surmount or paramount to any other risks you could possibly face is custody of the private keys, which make digital assets usable and spendable. So I think if you're reading through the prospectus of a traditional target date fund or any type of mutual fund, you might ask who the custodian is in a standard due diligence questionnaire and not pay it much attention. Here, it's something where you really need to up your game on from a due diligence perspective. So maybe Christine, if you want to talk about the typical due diligence questions you'd get from a custody perspective.
Yeah, they can be pretty intense. So whether the client is considering a direct investment in digital assets or a fund manager, I think the one of the things to consider is that the fact that the ecosystem is fairly focused, and also you may see a successful fund manager that's managing 200 or 300 million. That's fairly small in the true institutional world. So it is also about meeting an institutional standard. By that meaning you have a full-time GC, you are using a robust custody provider. And by that, I mean that custody provider is fully audited. So we are seeing those questions from our clients that are pursuing institutional clients directly as well. So we may have an asset manager on platform that is looking to lean on us from a due diligence perspective to provide information around the infrastructure that we provide to them. So that's a critical piece in our offering as well. But just know that the ecosystem itself is fairly nascent, and it becomes even more bespoke when you start to think about the longer tail of assets. So you may find an active strategy that focuses on the top 5 or the top 10. If that active strategy involves derivatives, are those, is that manager using, an offshore unregulated exchange? That may be a factor to an institution that would be considering using that manager. Hopefully that's helpful.
Yeah, of course. I see a couple of questions coming in. We will be taking questions towards the end, so please feel free to add more, and I'll keep an eye on them. But I did want to talk about the products that Fidelity is thinking about, and especially Brian, your team, actively kind of researching the products that, one, institutionals are demanding, and second, are feasible in today's day and world, because Bitcoin is really a paradigm shift in terms of how we can manage digital assets, and it's very different than a lot of the traditional assets that we are used to.
Yeah, so right now from an asset management business, again, building fund structures to invest today only in Bitcoin, and then perhaps other digital assets, including others separate and distinct from Bitcoin. Our tactical focus is democratization of beta. So right now we have like a private fund structure which exists and is available to your accredited investors. And then, as you may or may not know, we're one of several asset management firms that have filed S1s for a Bitcoin ETF. And from our point of view, the ETF vehicle represents kind of like the crown jewel of a fund vehicle structure for investors to access beta to an asset class. I did see a question come in, when will the ETF for ETP get approved? Not in our discretion. We're engaged in dialogue with the SEC. However, I just will say from Fidelity's perspective, we're pretty adamant that we prefer a spot Bitcoin ETF be approved as opposed to a futures Bitcoin ETF. We'll see how that develops, but we really think that the spot product would provide a better investor experience and ability to track the price of Bitcoin via a fund structure. And then, as I mentioned, right now we're kind of in like the whiteboarding, research and development, brainstorming session for what a fund or asset management business in digital assets is going to look like 3 to 5 years in the future. I remember I mentioned earlier that we're still kind of like tailgating before the football game. At this point in time, it's hard to envision what it will look like in the future. But I think depending upon the different clients that we're working with, like for example, in the RIA channel, where they maybe have clients that are going directly to exchanges and buying digital assets directly. Could we create some fund structure where people could potentially contribute in kind and then generate some sort of an income or a yield, or manage the volatility of those assets, right? Or, and I think also, I think that the biggest concern amongst the audience was volatility of Bitcoin and digital assets. For a institutional investor like a pension plan to dip their toes in the water in this space, they may prefer some sort of a fund structure which provides a nice upside downside capture as opposed to just beta to Bitcoin or digital tokens in general. The other thing I'd mention is, as we're thinking about perhaps like a crypto index fund, like a top 5 or top 10, I do think it would be prudent for this space to bypass the traditional market cap structure weighting for how index products are typically structured. Maybe skip that and go directly to like some sort of like a factor quantitative based or like smart beta type of a index structure, because as we could certainly get into, that there's a lot more than just market cap from our perspective that would warrant that would make a token like investable for any investor, albeit institutional or retail.
And there's a long-standing meme in the crypto space: when ETF. Everyone's waiting for that answer. It's been really challenging. I know a lot of different companies have applied for it, but hasn't had good success. So I want to talk about regulation in that same vein. You know, what are some of the emerging regulatory challenges that, one, Fidelity is facing, and second, institutional investors are concerned about? And I guess, you know, also adding on to that question, how does that affect institutional adoption in the long term?
Brian, I'll take a shot, and then I'll hand it over to you as well. So when we usually the topic of regulation is really one of the key key obstacles to institutional adoption. We've seen it come up as kind of the #1 obstacle in previous digital surveys. This year, it was replaced by volatility, and it's actually been that risk has begun to become mitigated. But I would say things really did begin to change in 2020 when you started to see kind of more, even in enforcement actions, whether it was the SEC or the CFTC, they cited the promise for digital assets. So clearly there's a focus around preserving the innovation that digital assets provides, but really thinking about the appropriate construct. And it is, it's exceptionally challenging. You're talking about a very diverse set of assets within an asset class, and long-standing regulations that have existed, whether they're in commodities or the securities world. And not all of them kind of really match one for one with respect to digital assets. And so you have a diverse group of assets. You also have a number of regulators kind of weighing in, and the definition of that digital assets, or a digital asset, could change over the digital asset's lifetime. So it could be considered a commodity at one point. It could be considered currency, and then it could be considered potentially a security as well. So it does create, an incredible amount of complexity. I would say, though, from a regulatory perspective, one of the key events was the summer of 2020, when the OCC basically said, it's okay for banks to hold cryptocurrency on behalf of their clients, and that I think was a huge step in the right direction, just to create enthusiasm and reduce some of the ambiguity. We've been kind of marching forward with specific use cases, and now you're starting to see industry groups form around specific issues and specific and specific use cases for digital assets. And one example was late 2020, when Treasury kind of opined around the Treasury came out with a pretty comprehensive statement, which really created shockwaves around the industry. The industry really showed up with something like 7,000 comment letters. So I think that the industry engagement, as well as not just regulators, but lawmakers really involved in the process of kind of creating the right framework, we're really starting to see kind of some traction there. And you're starting to see folks take regulatory documents or regulatory recommendations and then make them into potential actionable legislation. So McHenry also, I'm not sure if everyone saw, but McHenry took Hester Pierce's potential framework for safe harbor and made that a recommendation for legislation. So you have a number of factors. You have a very active kind of ecosystem that has lots of different stakeholders, of which some want no regulation, some want robust regulation. There has to be something in the middle, but suffice to say, we have a strong government relations team that's really helping us kind of shape that framework and those discussions around regulation with regulators as well. So there's much to be seen, but every day we start to see greater progress. I would say one of the key areas of focus is around yield products that have been put in front of retail clients, and that we will absolutely see kind of some sort of resolution with respect to those products, I think, in the near term. And that may set the stage for more constructive evolution in terms of a regulatory focus, but I can pause there.
Yeah, I don't know, Brian, if you want to add something, but I've had the opportunity to visit DC for a congressional briefing, just interact with some of these regulators and Congress people. And I think, they definitely have an open mind, but there is a lot to be done in terms of education. I think there's a lot of myths and misconceptions around the technology and how it's used. So it's going to be a long road, but I'm excited to see, companies like Fidelity kind of taking the lead in terms of education, having those conversations around what regulations could be viable for this industry. I know we have only 10 minutes left, so would love to see more questions come in. But before I take the audience question, I had one last question from my end for both of you, Christine and Brian. What is kind of, Fidelity's take on things beyond Bitcoin? I know Fidelity over the years, started with mining for Bitcoin, created products around Bitcoin's custody. Now with funds, has been really Bitcoin heavy. But I know recently, Fidelity is starting to explore assets beyond Bitcoin. But also in the investor study I saw, there was an increased interest in tokenized assets, which is a very interesting concept, especially for our CFA members. And I had the opportunity to do some research work on tokenized assets with the MIT Media Lab, and I had the opportunity to present it to Abigail Johnson herself. So yeah, curious to hear how Fidelity is thinking beyond Bitcoin.
I'm happy to take a stab, but Brian, I'll also hand it over to you. And I'm sorry if I keep speaking first. So if you'd like to go first, that's fine. So when we look at either adding assets to the platform, we kind of take a multi-threaded approach. And clearly, like, client demand is one of the factors that we look at. It's also the technical feasibility of kind of implementing a custody and execution services solution, as well as the regulatory environment. So we do know that Bitcoin and Ethereum have some degree of regulatory certainty, as they're not securities. When we start to kind of go down the stack in terms of other assets or tokenized securities, that begins to change the regulatory framework, and we want to ensure that we have the appropriate regulatory framework. We're not opposed in any way, shape, or form. We believe that we will see the tokenization of real world assets continue, and we think that that's also a very, it's a very strong use case for traditional financial institutions as well. And so we would expect to be a player in that space. We'd like to see greater regulatory guidance around what's the most appropriate construct. And I think some of our clients, as well as, we want there are no broker dealers in crypto, meaning there's not a traditional broker dealer construct. Is that the right construct for securities of this kind? If so, we would love to see greater guidance out of the SEC and FINRA with respect to those assets and those products.
Yeah, I agree with everything Christine just shared. I just think when you kind of think about Fidelity's approach to the space, I'd kind of put us in comparison versus a firm which is crypto only, and then a more of our traditional competitor set, if you think of like a globally diversified multi-asset management firm, right? So we've spent in excess of 6 years verifying the use case, investment case, and protocol for Bitcoin. Eventually got to the point in 2018 where we felt comfortable putting the firm's brand name next to a commercial offering in the space. Are we going to be first to beat some crypto-only competitors and offering things where we're still trying to sort out both the long-term use case of some of these protocols as well as the regulatory picture for some of these protocols? No, we're not. However, we're committed to our clients to taking a very prudent and committed diagnostic approach to all these different protocols to justify how we can better enable them to invest in how these technologies will impact the financial services space more broadly. So we're still kind of in the R&D and working through phase for some of these other protocols, and just for the nature of our business relative to like a crypto only firm, we're just trying to make sure we're being patient and doing right by our clients as well as our firm.
Amazing. I'm going to take a couple of questions from the audience today. I think the first question, I'll just read it out. Do you see more companies creating their own virtual stablecoin currency? I don't think we spoke about USDC or even just CBDC, which is central bank digital currency here, but I think the question relates to that, where do we see more companies creating their own virtual stablecoin currency to assist with the back end of transferring money across different accounts and entities, similar to JPM coin?
I find it astonishing that we've gone 53 minutes without mentioning the word stablecoin. So it is astonishing. I think that, look, I think there are tremendous use cases for stablecoins in general. I wouldn't imagine that you would start to see additional bespoke stablecoins for the purposes of moving funds, but that's just my view. But I do think that in terms of stablecoin usage, you will start to see additional stablecoins being used, additional use cases for existing stablecoins. So I think USDC has great promise. And then clearly there are, I think, 100 countries that are working on central bank digital currencies. I think it's an inevitability. It is clearly, it's clearly a way for not just to create a digital currency alongside a fiat currency, but for government to have kind of programmable money and to eliminate things like fraud and fraud for social programs. And so it's really the potential for both central bank digital currencies and stablecoins is really great. I mean, it's just incredible. And I do think, within the context of regulation, the OCC saying that banks can hold stablecoin reserves gives stablecoins potentially even more use cases. I think it's an exciting time for stablecoins.
There's another question around, most of today's conversation was around digital assets, but there is a lot of other utility with regards to blockchain. And thank you for the shout out to the company I work for, Skynet and Saya. But the question is, while there is not a direct department within Fidelity, do you see businesses moving closer to using blockchain for other applications like file storage, user account management, supply chain, I know is a big one with IBM, identity, decentralized identity is a big component. So yeah.
I think, Monzi, you might be the most qualified person up here to answer that question, quite frankly. I honestly, I'd love to hear your input on that, to be honest.
I'm not sure how Fidelity is thinking about it,
Yeah.
but there's definitely tons of companies and projects out there that are exploring use cases beyond finance. And I think that's the exciting part about crypto, where it's just not impacting the financial infrastructure. Like I mentioned, it's really trying to change the entire internet and the economy around internet. So with that, it means, how do you control data in a non-centralized manner? How do you think about identity in a decentralized manner? So it goes, even though crypto usually is associated with money and finance, I think it goes a lot beyond that. And I'm happy to dig into some of those use cases directly, Tyler, if you want to talk to me. But thank you for that question. Another question, I personally had, and I know a lot of the fellow CFA members had, is how should they be thinking about the space in terms of disrupting their livelihoods or their jobs? How should they be thinking about cryptocurrencies and digital assets impacting their day-to-day?
Yeah, I guess it depends what your day-to-day is. Like when I think about like the use case for Bitcoin, right? I think less so competing with other cryptos is probably competing with other monies, which are issued by central institutions, right? And the monies that it's targeting now are gold potentially, and then monies issued by countries which don't have a great track record of controlling inflation or are properly enforcing property rights. So I don't necessarily view Bitcoin per se as attacking that. The ones that are more interesting are some of these smart contract platforms, and those could potentially compete with or disrupt industries that are extremely or heavily intermediated. We're in the very, very early, I don't even know if the tailgate has started for that quite yet. I think people are still kind of trying to play around with and understand what this technology might mean or impact. The first thing I would suggest is just to spend time educating yourself on the topic, whether you're investing in it or interested in working in the space. What I tell friends who are interested in investing in Bitcoin or another cryptocurrency is, like, the size of any individual investment you have should be directly correlated with the amount of time you spent researching it or studying it. And I think if you're trying to think about how it could impact you, I think if you're working in an industry which relies on like intermediation, ensuring that intermediation is aligned with like the consumer or the client, or is as efficient and scalable as possible, would perhaps be the best way to think about it.
Yeah, I would add that decentralized finance in general, it's a very broad topic, has great promise. These are proof of concepts that are really playing out in real time. To the extent that they become much more successful and more robust, yes, they could potentially challenge some of the existing functions of, say, an intermediary. I think we have a lot of time, but really, it's definitely space to watch, and it's absolutely exciting to see the possibilities of what may happen in the future. And to your question, the question about leveraging the underlying technology. We're really fortunate to have the Fidelity Center for Applied Technologies kind of in-house, working on additional use cases that are maybe non-financial around distributed ledger technology and crypto. So it's pretty cool. It's really cool.
Yeah, I love the advice about keeping an eye on the space. Definitely, there's a lot of potential and a lot of interesting things. And I think also there's a flow of talent that's happening from like the traditional finance space into the crypto space. So yeah, I'm super excited about the future of the space. And unfortunately, we've run out of time. But last question, how can everyone keep up with everything that's happening at Fidelity and the work that you both are doing?
I would say the best place to keep up with everything that Fidelity is doing in crypto is called our Fidelity Digital Assets blog. So if you're on Google or just whatever search browser you use, just search Fidelity Digital Assets blog, and that will take you to our current and most up-to-date thought leadership that Christine and her team are producing in this space.
And also, if you are interested in kind of our weekly newsletters, we do publish weekly newsletters that are a little bit more topical. You can also request to be part of our mailing list, and we can send those to you as well. But I would also say to keep in touch with what we're doing. We also are active on Twitter as well. So You can follow us on Twitter too.
Crypto space definitely lives and breathes on Twitter. So that's a good hotspot to catch all of the exciting things that's happening in the space. Unless Gary or Jamie have anything to say, first of all, thank you both for taking the time today. This was a really insightful and exciting conversation. I really appreciate your time, and thank you all the audience members for joining us.
Thanks for having us.
Thanks, everyone.